Guys, as of right now, sellers are currently shocked. There are empty open houses everywhere. Real estate agents are also dropping like flies because in this current US housing market, they simply cannot sell a house. To confirm this, we are going to look into this REDFIN article and various data points, including graphs, and the information that is shared is pretty much concerning for the housing market. You have been warned. The headline starts off with pending home sales fell 35%, largest drop in at least 7 years. Let's discuss this graph because it's very important information that you need to see. As you can see, pending home sales dropped 35.2%. It's way down from the peak of 2021 when pending home sales were up 57.5%. And also the median sales price of a home was $382,600. Now I want to show you guys another important graph, so hopefully you can pay attention. This graph shows the new privately owned housing units under construction. But actually before the pandemic, homes were building at a pretty slow rate. As of right now, we are building more houses than really ever before. And as you can see, guys, around the early 2000s, dot-com bubble burst. It started climbing up a little bit, and then soon, guys, the real estate crash hit. And even still today, guys, the 2008 real estate crash still affects us. The pandemic only highlighted the issue even more. Experts estimated us to be short 3 million homes. But then get this, guys, the REDFIN deputy chief economist had this to say: until this month, the pullback in the housing market could be described as something of a return to pre-pandemic conditions before sub 3% mortgage rates ignited a home buying frenzy in 2020 and 2021. He then goes on to say mortgage purchase applications are below 2018 levels. Now I want to show you guys a graph because what he says holds a lot of truth. This information is from the National Association of Realtors, put into data format by Reventure Consulting. As you can see, mid 2020 all the way till 21, mortgage demand was high. Then 2022 hit and it was a massive plummet. Due to the massive Fed funds rate increase, people really couldn't afford mortgage rates as they used to be. Or they was really scared on how volatile the market was becoming. And along with mortgage demand, existing home sales were falling down with it. There were crazy amounts of homes sold in 2020 and 2021. In fact, 2021 has sold the most homes since 2006. And that was when everybody and their mother could get a mortgage. And according to rent.com, rent is up 8.79% year over year. This actually puts investors in a really nasty spot. It's either they put a home up for rent or they wait out the housing market, which we all know it seems like the housing market is only going to get worse. Now, this next piece of information is really shocking because I didn't know sellers have gotten this desperate. Every set of market conditions comes with its own trade-offs. In the spring, buyers had to race and wager over homes that flew off the market within a week. This graph shows the average days on the market. And as you can see, the average days on the market is 32. This is a massive increase because we are 13% year over year. And if you look at before that, before the interest rates increase, a lot of the days on the market was like were in their early 20s or if not in their teens, with their lowest month being in July of 2021, which there was only houses on the market for only 15 days. But there was some actual good news said in this article. While mortgage rates are much higher now, buyers have the opportunity to negotiate. We gotten sellers to agree to a lower price and to provide a credit, which enables the buyer to buy down their mortgage rate to below 6%. So basically the housing market is starting to flip. So much so the sellers is starting to help you with your interest rate. But even if so, I still don't think it's a smart time to buy because you never know when the Fed will pivot their monetary policy. Let's look at another graph that actually reinforces my point. Around the time the dot-com bubble burst, interest rates went down to nearly around the 1% range, which was pretty low. And then it went back up around the 2008, leading up to the 2008 crash. And then it went down again all the way to like barely nothing for the whole late 2000s and 2010s. Once the pandemic hit, it rose up again. So we can see this trend happening again. It's a pattern that has been forming over the years. Moving on back to the article, it tells us even more interesting information that I think you guys should actually hear. Right now, we are looking at the leading indicators of home buyer activity. Fewer people search for homes for sale on Google. Searches ended the week were down 28% from a year earlier. The seasonally adjusted REDFIN Home Buyer Demand Index, A measure of requests for home tours and other home buying services from REDFIN agents declined 11% in the past 4 weeks to its lowest point since May 2020. The index was down 35% year over year, which is absolutely insane. I'm finna read you guys the next tidbit of information. And here comes touring activity. As of October 23rd, it was down 27% from the start of the year compared to 7% from last year. Even better, let's actually look at the graph from showing time, and it will actually be a good indicator of how bad empty open houses have gotten. The difference between 2022, lightest blue is 2020 and the orange is 2022, is like a massive difference. In 2020, they were seeing everybody, it was just packed. You was getting up to 42%. But when the Fed raised the interest rates, it got sky high in terms of like people not showing up. Now that brings us to our next topic, the median sales price of homes. Now, as you can see, the median sales price is up 5.5% year over year. We are going to dissect this even more because in 2022, home prices have hit record high levels. And in 2021, it was high, but it wasn't that high because 2022, it still had the impact of, low interest rates. It didn't really take effect till like Q3, and now it's coming into Q4. And then 2020, that was the effect of low interest rates and never having to go through the high interest rates as much as 2022 had. But now we're going to look into the median asking price of homes. But guys, before we get into this, I want to show you guys some crucial information. Now, if you are bidding on a home or sending a price to a home, do not do the full actual price for the home. What you guys should do, you should pay whatever the home would have been worth pre-pandemic, because you guys have a lot of leverage more than you used to, and the sellers are constantly lowering their price. It would be in their best interest to sell at that price right now. That would make them happy. Do not do that. For example, the median asking price is, let's say, $372,000, and let's say pre-pandemic it was worth $272,000. Offer him $272,000, and most likely he's also going to come down on his price sometimes. Now, the median asking price is up 6.4% year over year, and it's around $372,500. But I wouldn't be surprised if this number absolutely just collapsed in on itself and just. We already know a good bit what the Fed is going to do. They're going to eventually slow down on their aggressive rate hikes, and then they're going to bottom interest rates again, and then everything just going to come crashing down. This next tidbit information is really important for you guys because it's going to give you guys an insight on the extremely high mortgage payments you guys would see if you ever decided to hop into the housing market. And I'm not against it, I'm just telling you. Based on this graph, home buyer mortgage payments are up 50% year over year, which this then puts the average monthly mortgage payment to $2,542 a month. And this also outpriced a lot of buyers out of the housing market. Now guys, the next information is interesting because you would think it would be the opposite of this, but I'm gonna go in detail about this. Now, we are currently looking at the new listings for sale graph, and you can currently see the new listings is down 21% year over year, and that is a pretty significant drop. But sellers usually also have to buy, and as of right now, that is currently not easy. These are basically the sellers that should have sold earlier, and now they find themselves in a very sticky situation. Now, you may be under the illusion that we have added inventory. Well, some of that is actually inflated, and we are going to dive into this and look into this active listings graph. Now, you can see it is up 3.7% year over year, but this is most likely because homes are most likely been able to stay on the housing market longer due to the median days on the market. Nobody is buying as often, so it just adds on to the inventory. You can almost exactly see this information from the next graph that I'm about to show you guys, so pay attention. Now, currently there are 3.1 months of supply on the housing market, which is available. So this would literally puts us right around closer to a neutral market. Now, a neutral market would be right around 3 to 6 months of housing inventory, but it's still leaning towards the seller market still, but it's still getting up there very slowly. Now, for buyers, if you wanted to be close to a buyer's market, you would probably be looking at around, let's say, you're looking around 6 or more months of inventory. Now, this next graph is really inspiring because it shows how the housing market is changing and finally flipping on its back. 29% of homes sold above final list price. As you guys can see, it is going downwards. At the beginning, it got very high, probably the highest it's ever been in a long time. In 2021, as you can see at this point in time, it was still, it was still higher. It was way higher. And also 2022 is curving down. Now, this is going to be the end of the video. My goal is to keep you guys updated on the housing market. So make sure you like, comment, subscribe. I read books every day and stay as knowledgeable as possible too, even on historical events.